launch of the Nepal Country Report 2026, presented by the Research Intelligence Unit. In this webinar, we explore Nepal's economic outlook and property market, highlighting key macro trends, market signals, investment themes, policy direction, and emerging risks, moderated by Roshan Madawela, with presentations by Nirikshani Mendis and Hoshin Ranimini, and guest insights from Lochan Koirala, official sponsor.
Good morning, good afternoon, and good evening, wherever you're joining us from today. And a big thank you for joining us on this webinar. It's the Research Intelligence Unit Country Report launch for Nepal. I welcome you all. In the next 1 hour or a bit longer, we will be having a report launch presentation by our team, as well as contributions from our distinguished guest today, joining us from Kathmandu. Before I start, a very big thank you to Fitzer, our main sponsor for this event. Fitzer is Sri Lanka's first ever budget airline. They already fly to KL, to the Maldives, to Dubai, and to Dhaka. And they have recently started the business class facility for your convenience. And they have 3 more exciting destinations planned for later this year. Really looking forward to that. Now, moving into Nepal. Why are we looking at Nepal? Why are investors and developers looking at Nepal? Well, Nepal is a country that has experienced very steady growth in the last 25 years, peaking at some 7.6% in 2018, and was on a steady course despite the political turbulence that has unfortunately plagued many neighboring countries in the Asia region. Nevertheless, it continued to grow, and apart from the 2.7 GDP contraction following the pandemic, it's been a story of positive growth on the whole. And this year's prediction is about 5.2%. We'll come back to this during this podcast webinar. It's a country blessed with an abundance of natural resources. And the tourism sector has a lot of promise, attracting some 1.5 million visitors, whilst the hydropower sector has always been in the front line of interest for foreign and local investors. Being mainly an agricultural economy at the moment, we see that the potential to get into manufacturing, value-added agricultural production is one of the things that the country can look forward to. So in today's webinar, we will be looking at the economy, and the spotlight will be on the real estate sector. The real estate sector contributes some 8 to 9% towards the GDP of Nepal. Viewed in the context of other neighboring countries, from Maldives, Sri Lanka, India to Pakistan and Bangladesh, this is a very good number. It means that real estate is an important facet of the growth of Nepal as an economy, and it contributes immensely to employment, to urban development, and also government revenue. My colleagues will be delving a little bit more into that as we go on. But the thing I want to touch upon here by way of an introduction is that investors, local and foreign, look at a certain number of economic indicators or variables when they look at investing in emerging market real estate. There is an estimated $1 trillion of emerging market and developed market real estate investment floating around the world this year. So we would hope that Nepal can tap into it. So what do these people look for? They look for strong demographics. They look for good infrastructure expenditure, urbanization. They look for a good GDP, and many institutional investors in particular will look at factors such as property rights. Add to this a strong diaspora and migrant worker community, which Nepal has, and they contribute by way of remittances. And then we have the recipe for a potential economic growth with real estate contributing significantly. Right. The format of today will be the report launch, which will be presented by research economist Hoshin Ranimini at the ARA unit, and Nirikshani Mendis, also research economist at the Research Intelligence Unit. And following the presentation, we will have a discussion, and we will be speaking to, we'll be encouraging the audience to send your questions. So please, you can start doing that now. Use the relevant chat box to send your questions in. And we have a special guest from Kathmandu, Mr. Lochan Koirala, who's the director of Prabhu Capital Limited. Big welcome to my guests. Now, I will hand it over to Hoshin Madawela to start this session, and we'll get back to the panel discussion after we hear what our research economists have to say. Thank you. Over to you.
Okay, thank you, Mr. Roshan. So, good afternoon, everyone, and thank you for joining with us today. My name is Nirikshani, and on behalf of our unit, simply the Research Intelligence Unit, we are really pleased to present our need for real estate and the economic development outlook for 2025 to 2026. So, before we get into the details, I just want to set the stage with a few numbers you can see on the screen right now. So Nepal is a beautiful country, and it has a population of 30.4 million people, and they are accounting for a GDP of $42 billion. And when it comes to their growth rate, it is accounted for 4.6%. And it welcomed 1.15 million tourists last year. So these are actually quite compelling numbers for a country that often doesn't get the attention it deserves in the investment community. So that's why we thought we will be doing this webinar, and we will be presenting our country report with itself. So what we are going to do today is basically spend the first half of the session on the macroeconomic picture. And we will be going in depth of that because we think that the macro story is actually really important when you are going to understand where the opportunities are in a particular country. And then we will be slowly moving into the real estate sector analysis in the second half. So without further ado, we will be moving to see what's the agenda for today. So you can see that we have 6 sections. We will be starting off with the Nepal at a glance, and then we will be looking towards the macroeconomic performance in detail. We will be looking at how the GDP was and how it has changed, the inflation and the current monetary policy, fiscal policy, and how the external sector and the tourism performs in Nepal. So then we will be coming to the real estate sector and the investment outlook. So there is a lot to cover. So without further ado, we will be jumping into the Nepal at a glance. So here you can see that first thing you need to know is Nepal is a federal democratic republic country. It adopted a new constitution in 2015, and that was a pretty landmark movement for this country. It moved from a unitary system to a 7-province federal structure. So now you have 3 tiers of government. starting from federal, provincial, and local. And this is still maturing. But it's creating a new growth centers beyond just the Kathmandu Valley. So which is relevant for the real estate as well as for the other sectors. So the population is about 30.4 million. I have already mentioned about this. And also the median age or the average age of the population is roughly 25 years. So what does it mean? So this is a very young country, and that really matters. Why? Because it means you have a growing working age population. And there is a rise in consumption, and the increasing urbanization is particularly seen. And the Kathmandu Valley itself alone has over 3 million people, and it's expanding every year. I'll be coming to the reasons in a while. And GDP per capita is around $1,385. Now, that puts Nepal in the low income category. But here is an important takeaway that you should think. Nepal is actually on track for the graduation from the UN's least developed country category. So the World Bank reclassified it as a lower middle income country economy back in 2020. So you can see that they are on their way to the graduation from the UN's least developed country category to an upper grade. So the trajectory is clearly upward. One thing that's really distinctive about the Nepal's economy is the role of remittance that they are having. Remittances are getting from Nepalis who are working abroad, primarily in the Gulf states, including Gulf states as well as the Malaysia, and also increasingly in the countries like Japan and South Korea. And you know what? These remittances, it accounts for roughly 25% of GDP. And that's one of the highest ratios in the world. And this has a direct impact on the real estate as well as for the other sectors as well. Why? Because you can see that a significant portion of remittance income flows into property purchases and the construction as well as for the consumption. So the currency is the Nepali rupee, which is pegged to the Indian rupee at a fixed rate. So this is actually quite important for the macroeconomic stability of this country, because it basically means Nepal imports its monetary policy from India to some extent, not totally though. And Indian inflation trends directly affect Nepal. Moving towards the strategic positioning of this country, now I want to spend a moment on why Nepal's strategic position really matters, because I think this is something that's often underappreciated. Geographically, if you consider Nepal, it sits between the India and China. So they are the world's two most populous countries with a combined market of 2.8 billion consumers. So it's huge. And both countries have shown increasing interest in Nepal. India has traditionally been Nepal's closest economic partner for ages. And that open border policy, the currency peg, and the deep cultural ties, that means the Indian economic trends directly influence the Nepal. On the other side, you can see that China has also been investing through the Belt Road Initiative that they are having. They are supporting the infrastructure projects, including the planned Trans-Himalayan Railway road connectivity upgrades. So basically, you can see that Nepal is positioned at this very interesting crossroads. They are among two giants. They are in between two giants. And while the country has historically been seen as a landlocked and somewhat isolated, someone can say so though, the reality is that it improved connectivity and it's gradually changing the narrative that I have already mentioned. So you can see that the international airports are coming towards Bhairava and Pokhara, and they are having a planned airport at Nirikshani International Airport, and the Kathmandu Terai Expressway. These are all projects that, you know, once it's completed, it will fundamentally change. It will fundamentally change the Nepal's accessibility, and that will really open the opportunities for the outer world. On the tourism front, what you can see is Nepal has extraordinary natural assets. I think Mr. Roshan also has mentioned. And I would like to give a warning as well. One time if you go to Nepal, you will be keep visiting because it's that much beautiful. And they're having 8 of the world's 14 highest peaks, including the Everest, obviously we all know that, and multiple UNESCO World Heritage Sites. And they are having an incredibly rich cultural heritage that everyone would love to learn. And tourism has always been central to the Nepal's identity, and there is a strong case that it's still significantly under-monetized relative to its potential. So if you do case studies in comparison to Nepal, you can see that yes, Nepal has an untapped potential to grow. And then there is the workforce angle that we are going to talk. So as I have already mentioned, you have a young, increasingly connected population. Digital penetration is also growing rapidly, and the fintech is also emerging in this country. And obviously the diaspora, millions of Nepalis working abroad, and what that represent both a source of capital and a potential returnee talent pool. Actually, the non-resident Nepali community, or as we call it them as NRN community, has been a really important driver for the investment, particularly in the real estate as well as in the hospitality sector. So we are coming towards the GDP, moving towards the GDP growth. So this is a kind of a story of resilience. So we are going to get into the numbers. This is the GDP growth chart that you can see here. And I want you to really look at the shape of this line, because I think this line tells an important story that you should keep in your mind. If you start from 2015, you will recall that was the year of devastating earthquake that has happened to Nepal. And the growth has dropped to 3.5% that year. And then basically it collapsed to 0.4% in 2016, unfortunately. Partly this has happened because of the earthquake aftermath, and partly because of the India border blockade, because that disrupted the supply chains for months. That was a really tough period for the Nepal. But then look at what happened next. The economy quickly bounced back strongly, 8.6% growth in 2017, and then 7.4% in 2018, 6.4% in 2019. Nepal is actually one of the fastest growing economies in South Asia. During this period, you can clearly see that. And the post-earthquake reconstruction, that improved the agricultural output, and the service sector also started to boom. And you can see that all these things help to drive the recovery of the Nepal economy. Then obviously, we all know that the whole world was hit by COVID in 2020. And Nepal got contracted by another 2.4%. Tourism sector started to collapse. Remittances initially dropped, and the economy took a real hit during this period. But again, you can see that, look at the recovery, 4.5% in 2021 to 5.3% in 2022. So you can see that there is a softer patch in 2023 at 2.3%. Why? It mainly because of the global tightening cycle and some domestic credit issues that they have had to face. But then again, it recovered to 3.5% in 2024 and 4.6% in 2025. Now, you know what, the World Bank, they are projecting a temporary moderation to 2.6% in 2026. And I want to be very transparent here about why. Because you know that last September, like September 2025, the political unrest had a significant impact on the services sector and the tourism sector. Whenever there is a political instability, not only in Nepal, in any of the country, it affects the business confidence and the visitor arrivals. It affects to these things quickly. But here's the thing that you need to think. The projection for 2027 is a rebound to 4.7%. And it will be supported by the reconstruction spending, improved political stability, and the base effect. So that's the story which was told by the World Bank. So the narrative I would take from this chart, basically the resilience of the Nepal economy. This economy has been through the earthquakes, blockades, the pandemic, political disruptions, you name it. And it keeps bouncing back. That's the true resilience that an economy can have. So the midterm growth potential is in the 4 to 5% range, which for South Asian economy at this stage of development is actually quite healthy. We can say so. For context, Nepal's growth compares favorable with the several regional peers. If you consider Bangladesh, they has been in a growing faster pace and but with significantly more structural challenges and the governance. If you consider Sri Lanka, we also have been going through a severe crisis. Pakistan has been in and out of IMF programs time to time. Nepal's relatively steady trajectory without any sovereign debt crisis or balance of payments emergencies. So you can see that it talks about actually a positive differentiator that you can see in Nepal's economy compared to the other South Asian relatives. So we are coming towards the inflation because the inflation is actually a really good news story for Nepal. Why? If you look at this chart, that will make sense. You can see that inflation peaked at 7.7% in 2023. That was totally driven by the global commodity price spike following the Russian-Ukraine conflict. Higher food prices were there and some domestic supply disruptions were also there. 7.7% is uncomfortable. I agree. But it's worth nothing that many countries experienced much worse during that period due to the geopolitical tensions. What happened since then is a steady decline. 5.4% in 2024 and now 4.1% in 2025. That's well within the Nepal Rastra Bank target ceiling of 5%. So the Rastra Bank is basically achieving its inflation objective right now. That's a positive signal for macroeconomic management for this country. And now we have to see that there are few structural factors that are helping here. First, as I have already mentioned, the Nepali rupee is pegged to the Indian rupee. So when Indian inflation moderates, what is happening? It has been doing, Nepal benefits directly. Second, the global commodity prices, it started to ease from the 2020 peaks. And then the third, the central bank has been quite disciplined in its monetary management compared to the other regional competitors. So why does this really matter for the real estate or the real estate investors? Basically, stable and predictable inflation means that the business planning becomes easier and their confidence can be increased with this. So you know that construction costs become more predictable because of that, and the mortgage affordability improves as the nominal rates can come down without being eroded by the inflation. And household purchasing power is also pursued, which supports the demand of the economy. One thing I would like to flag here is the Nepal's inflation basket is quite heavily weighted towards the food and beverages. This is something unique though. And that makes up nearly 50% of the consumer price index. So food price shocks can move the headline numbers quite significantly, but the underlying trend is clearly toward the stability. And that's constructive, so you have to think about that aspect as well. Coming towards the monetary policy, so here this is actually where things get really interesting from an investment perspective. So this chart, it clearly shows the policy repo rate over time. You can see that the Nepal Central Bank, or as you call the Rastra Bank, that's the central bank of that, was quite aggressive in tightening during the 2022 to 2023 period. They have pushed the rates up to 7.0%. And why? Why did they do this? That was in response to the inflation spike that they have to face, and also to manage what they saw as excessive credit growth in the real estate sector. What they were trying to do is basically trying to cool down the speculation of the economy. But since then, they have been steadily easing. The rate came down to 5.5% in 2024 and further to 4.25% in 2025. So in terms of the basis points, it's 275 cut from the peak. That's a meaningful easing. Anyone can, go against that though. But now, here's the thing. I think this is really important to keep in your mind. even though the repo rate, so the policy rate has come down significantly, the transmission to the real economy has been somewhat slower than you would expect. Broad money growth, if you see here, M2 is only about 3.7%, which is quite low. Private sector credit growth is around 6 to 7%. And industry sources consistently tells us that actually the actually getting loans is improving, and especially for the real estate, it becomes big challenge. So basically, what's happening is here that the Rashtra Bank has opened the door with lower rates, but commercial banks are still being quite cautious in their lending. So they went through a period where the real estate and non-performing loans were rising, and they are not rushing to repeat that experience. I think that's fair because they have had the experience, because of that they are being cautious in this stage. So the credit impasse is there in theory, but the practical transmission is lagged. Having said that, there are some very specific and positive policy moves the Rashtra Bank has made for the real estate. They have raised the home loan ceiling from about $144,000 to $216,000. They increased the loan to value ratio to 80% for the first time buyers. That is up from the 60%, right? And they have been encouraging the banks to lend for productive housing construction. So the direction is clearly supportive in this stage. The banking sector itself is actually in reasonable shape. You can see according to the story that I have mentioned. And the capital adequacy ratios are also generally above the regulatory requirements of the country. And the deposit base is large. So Nepal has a high savings rate, partly driven by the remittances inflows that I have already mentioned, which is accounting for 25% of GDP. And the number of banking institutions, while it's been rationalized through the mergers, it also provides a competitive lending environment. I think the key takeaway that you have to think from the Nepal, they are in an easing cycle and the conditions for the credit growth are being set up. It may take another 6 to 12 months for the full effect to be felt in the real estate market, but the direction is clearly positive. So with that note, we are coming to the fiscal position. Because this is something that international investors and donors rightly focus on before they invest. So that's why we thought of we will be putting some effort into this. So the headline that we have to take is Nepal is assessed as low risk of debt distress by both the IMF and the World Bank. So that's a good story. And that's an important classification for a country like Nepal, and it really differentiates Nepal from several regional competitors or peers. And if you consider the public debt, it's in the mid 40% range of GDP. Now, you might sound like, it sounds like a lot. But let me put it in a context that where it really makes sense. The composition of public debt is quietly favorable. Why? About 24% of GDP is external debt and roughly 22% is domestic. So the external debt is largely concessional at this point, meaning what? From multilateral development banks and the bilateral donors are supporting. They are giving the loans and the funds at very low interest rate and with a long time period. So this is not commercial borrowing at market rates. And government revenue has also actually been growing nicely from about 17% GDP in 2015 to 20% in 2025. So what does it reflect? That reflects a growing tax base in the Nepal economy. And also the economic formalization and the improved tax administration. This is important because I think many of the South Asian countries are also struggling. Even we as Sri Lankans, we are also struggling to come to this space. So the VAT system, customs modernization, and the wider taxpayer coverage have all contributed to this big number. Now, the fiscal deficit is expected to widen somewhat in the year 26 to about 2.8% of GDP. But what you have to think is that this widening is driven by the productive spending. We are talking about the reconstruction, infrastructure investment that you have to do, private sector relief measures, and the election-related cost. So it's not a structural deterioration that I should say, and the deficit is projected to narrow again in year 2017 as revenue recovers. For those of you who are in the donor and the development community, because I know that not only the investors are coming to our webinar, donor and the development community people or the officials are also joining with us. Nepal's fiscal discipline has been a positive factor, and its ongoing engagement with the World Bank, ADB, and the other multinational institutions are also helping with this. The country continues to attract significant concessional financing to the country, and that really supports both the fiscal position and the investment climate, the positive investment climate of this country. So moving towards the external sector, I will be quickly go through this. So the forex reserves have reached $23 billion as of December 2025. That's up 19.6% year on year. And that covers roughly 12 to 14 months of import. That's really impressive, which by international standards very comfortable. Most economists consider 3 months addicted. So Nepal has roughly 4 times of that buffer. That's very positive. So the current account has swung into surplus, $2.54 billion. They are up from 1.18 billion of the prior year. Now that is partly driven by the remittance inflows, which remain strong in this economy, and partly by the import compression that has happened during the credit tightening phase. And they were having problems with the LC or the letter of credit issuance as well. So during this phase only this has happened, but still it's positive signal for the external stability. And the exports grew by 58.2% in the first months of 2025-26. Now you have to be very much balanced here, I myself included. This is coming off a low base, and Nepal's export sector is still quite small relative to their imports. So the trade deficit, it remains structurally wide, but the direction is encouraged. So their exports have reached about $838 million, and the export-import ratio was improved from 11.1% to 15.2%. So the economy itself is producing more for export, which is in the right direction. You know that when a country goes from export-led economy, it truly goes towards the economic growth. So what really drives the exports here? Mainly they are doing the agricultural products, as well as the carpets, garments, and some processed goods. So Nepal has significantly hydropower potential, and this is actually a long-term game changer for the Nepal's economy. Nepal has an estimated 42,000 megawatts of economically viable hydropower potential, which only a fraction has been developed. So you remember that in the beginning also I said that Nepal really has an untapped potential towards economic growth. As more hydropower projects come online, there is potential for Nepal to become a net energy exporter even to India, which would fundamentally change the trade balance equation. And remittance continues to be the backbone of the external sector. Nepal receives roughly $10 to $11 billion annually in remittances, making it one of the top remittances in the whole world, because I said that it's 25% of their GDP. And this influence provides a structural flow for the current account, and it directly supports the consumption, savings, and the real estate investment, plus the other investment sectors. So for investors, the strengthening forex reserves and the current account surplus mean reduced external vulnerability of the country. The currency back to Indian rupee provides stability for the country, and the amber reserves means that there is no near-term risk of balance of payment crisis for this country. So this is a fundamentally different risk profile from, if I say to Sri Lanka or Pakistan in the recent years. Last but not least, I'm coming to the tourism sector. So here, a quick picture. It's obviously a critical sector for Nepal. So the chart shows the tourist arrivals cover the last decade. You can see the pre-pandemic peak was about 1.2 million in 2019. The COVID basically wiped out tourism, not only for Nepal though. Arrivals collapsed to 2,30,000 in 2020 and just 1,50,000 in 2021. So that was devastating for the hospitality sector and for the thousands of people who were depending upon the tourism for their livelihoods. But the recovery has been quite strong. You can see that arrivals bounced back quickly, 6,15,000 in 2022. Then over a million in 2023, and it reached 1.15 million in 2025. So you can see that that's actually 96.8% of the pre-pandemic peak. So tourism has essentially recovered to where it was before the COVID, and it's encouraging. And here, the visitor mix is dominated by the SAARC countries, particularly the majority comes from India. It is by far the largest source market. Then you have growing segments from China and the other Asian countries and the European visitors also, who love to do the trekking and the hiking and all. So the Indian market is actually really interesting because it improved the road and air connectivity. Due to these things, Nepal's accessibility for the Indian tourists is very convenient for them. And also the government has set targets for 1.5 to 2 million annual tourists in the upcoming years, and there are infrastructure development that supports this. As I have mentioned, the international airports coming up. So with this, you can see that there are new accessibility routes. So tourism forex earnings were $249 million in 2025. And I think there is a genuine argument that Nepal is significantly under-earning relative to its tourism potential. When you compare per tourist spending in Nepal versus the countries like Vietnam, Cambodia, or even Bhutan, there is a clear gap that better infrastructure, services that you are going to render, and the marketing could close this gap. So, as you can see that 31% of all proposed FDI projects in Nepal target to enhance the tourism sector. On our journey to Nepal, we have met the officials, so they were also very positive, and they are seeing a very positive picture about the future tourism in Nepal. So international investors are already seeing this opportunity, and the entry brands like the Marriott, Hilton, and the Hyatt in recent years validate what I have mentioned just now. And with that, we are coming to the last bit, the infrastructure and the reform momentum. So on the airport front, I'm not going to tell it again. So as I have already mentioned that, on the housing finance reforms, the Rashtra Bank has been genuinely proactive in this regard. And they are raising the home loan ceiling to $216,000 to the LTV ratio of 80% for the first-time buyers are meaningful moves that they can take. And the federal structure is also creating new development dynamics for the cities like Pokhara, Bharatpur, Butwal, as well as Biratnagar. They are attracting the investment as provincial capitals and regional economic centers. So you can see that this decentralization in the Nepal economy or the country itself is healthy for the real estate market. Why? Because it highly reduces the dependency on the Kathmandu Valley. So overall, you have to see that the reform environment is not without challenges. And I'll be honest here, policy execution and the consistency have been flagged as concerns by industry, some industries. So the direction of travel is positive. You can see that. And that's what matters for the medium to long-term investment decisions when you're coming up to invest in Nepal's economy. So I think I have taken a lot of time from you, but then I will be handing over the presentation to Hoshin.
Thank you, Nirva, the excellent presentation on the economic overview. In particular, I thought the way that you demonstrated the potential of Nepal and the fundamentally healthy structure, especially that its debt position is very healthy compared to definitely most of the region, where you have less dependence on ISBs, international sovereign bonds, which have been quite harmful for many of the emerging economies. But we can see, thankfully, Nepal is steering clear. and you've also emphasized the potential for trade expansion, especially for Nepal sitting between two of the fastest growing economies in the world, China and India, right? So the potential to expand in tourism, in exports, imports, and so forth remains to be tapped further. So exciting times ahead. Thank you for that. Over to you, Hoshin, to shed some.
Yeah, thank you. Thank you, Mr. Roshan, and also Nirvada, thank you. So that is about the macroeconomic picture. So now let's shift the focus to the real estate market, right? So this is where the rubber meets the road for many of you who are watching today. So in here, we'll basically cover 4 sectors: the residential apartment sector, the office spaces, and also the tourism, the hospitality, the hotel sector, and also about the retail malls. Yeah, so you can see the key headline numbers on the screen. So around 538,000 property deed registrations that we can see, and also $377 million in government revenue from real estate has been generated, and around $1.93 billion in banking sector exposure to real estate also can be seen. So this is clearly a significant sector to the economy, as Mr. Roshan already mentioned in the very beginning. So moving on, let me start with the big picture on real estate. The donut chart here, the chart here, you can see, you can get a sense of where the investment has been concentrated when it comes to real estate in Nepal. So the hospitality sector has attracted the largest share, about 40%, as you can see, and that is because we can see hotel construction boom, and we will discuss a little bit of that in the upcoming slides as well. So residential is about 35%, office is about 15%, and the retail is about 10%. So the key metrics on the right, as you can see, it tells an important story. The GDP growth of 4.6% provides a macro tailwind. The Nepal, the Rashtra Bank has raised the maximum loan to $216,000, as my friend also mentioned, and the loan to value ratio to 80% from 60%. So those are meaningful policy supports. And the real estate credit growth is running about 7% year on year. And the Kathmandu Valley population is over 3 million and growing. And when it comes to the rental yields, it is about 2 to 3%. This actually tells you that most buyers are in it for capital appreciation rather than the rental income. Yeah. So the fundamental demand driver here is the urbanization. Because in most of the case, Nepal is predominantly a rural country in most part, but the shift is now focused or shifting to the urbanization, particularly in Kathmandu. Yeah. So, and within Kathmandu, the shift from standalone houses to apartment is defining a trend. Yeah. So diaspora capital from non-resident Nepalis is also a significant demand source, flowing into both residential and also to the hospitality sectors. Moving on, let's talk about the residential market, the apartment market. So here, this is where we can see most of the real estate segments being active here. So here, the horizontal bar chart shows you how pricing varies across Kathmandu. If you look at the New Road and the central areas are commanding about $230 per square foot, and areas like Lasimpad, which is more of an embassy and professional area, is at $216. And areas like Baneshpur, which is the family and the middle class belt, is at $194. And places like Baisapati in the southern suburbs is at about $166 per square foot. Now, look at the 3 big numbers on the right. This is really the story of the market. The entry-level apartments start about $72,000. That is accessible to young professionals, especially those funded by family support or remittance income. Compare that to building a standalone house in Kathmandu. You are looking at at around $288,000 minimum for land plus construction. So there is a clear economic logic driving this shift towards apartment. And at the top end, the luxury units range from $500,000 to $158 million, targeting the light domestic buyers and in the non-resident, the diaspora community as well. So you can see active project pipeline also in terms of Nepal residential real estate. So Karma Residencies, API Infra 1, there are many of such projects that are in the pipeline that is showing quite significant the confidence in the market as well. Let's move on to the office spaces. So this is an interesting market because it's essentially still in its early development stage, I would say. So the three big numbers at the top give you the picture actually. The Trade Tower Thalapatali is the benchmark at about 60% occupancy, which is a historic high performance back in the day. And when it comes to the rents, the prime rent rates actually range from 75 cents to $1.15 per square foot per month. And the sale prices for commercial space are around $108 to $180 per square foot. The building comparison table shows you the key office properties in Kathmandu from the United World Trade Center, which is the first modern office building back in 2007, through to newer developments like the Radisson Tower. You can see the rents range quite widely, which reflects the variation in quality and location as well. Now, the opportunity box on the right is where I want to draw your attention. There is an interesting dynamic in the market for office spaces. What we found is there is excess supply of generic commercial space, but there is actually an undersupply of truly international grade A office facilities. So fintech companies, IT firms, development agencies, and international organizations are looking for modern office space that meets international standards. And to be honest, there is not generally enough of it right now. So for the right developer, this represents a first move opportunity as well. And also the co-working spaces have also have been emerging since 2018, and they have been proving the model for flexible workspace demand. Rents are pretty competitive compared to other South Asian countries, cities like Dhaka or Colombo, which is a good sign if the global capacity centers are looking for Nepal. So with that, let's move on to the hotels and the hospitality sector. So hospitality is probably the most talked about real estate sector in Nepal right now, and for a good reason also. Yeah. So the numbers are striking here. There are about 23 five-star hotels right now and around 37 four-star hotels nationally. Another 1,907 rooms are confirmed in the pipeline to be delivered to the market. And also tourism forex earnings are about $249 million in 2025. So all these are telling a very good story here. And also when it comes to occupancy, this actually changed with the seasonality, about 45% in the low season, January to February, and drops to 40% during the monsoon months of May to July, and then peaks about to 68% in October to November, which is the prime trekking and festive season. December also has stayed quite strong, I would say, about 62%. So there is a clear seasonal demand here. During peak periods, the market is quite tough and tight actually. On the right, you can see the international brands that have entered Nepal: the Marriott, Hilton, Hyatt Regency, Sheraton under the ISG umbrella, Lemon Tree from India, and of course, we can see the Davrika, which is the Nepal's iconic heritage hotel brand, which command premium rates of around $250 per night. So these entrance of these international brand is actually a really important market signal. These companies do extensive due diligence before entering a market, and they are presence itself validates Nepal's hospitality potential. So I think the opportunity in the sector is selective. There has been significant investment, and the key will be matching the supply with the right demand segments. The experiential tourism, boutique hotels, adventure lodges, and wellness retreats are probably better positioned than adding more generic five-star rooms. So Nepal's unique position as a destination, mountains culture spiritually favors differentiated hospitality products, I would say. Let's move on to the retail sector. So actually the retail sector is growing through a natural evolution, I would say. So here the three-phase framework demonstrate that as well. The phase one was the mall construction boom from 2008 to 18, when the Civil Mall, the Chaya Center, the CTC Mall, and the Labim Mall was built. So these were pioneering projects that introduced organized retail to Kathmandu. And the phase two is what we are basically now. So this is a market adjustment period where consumer preferences are becoming clearer. Yeah, so cinema, food and beverage, and entertainment have emerged as the real anchor tenants that drive footfall. And in the phase three, which is where the market is heading, is mixed use development. So repositioning these spaces to include offices, education, and community hubs alongside retail would be a good position going forward in addressing these vacancy issues. So the bottom strip here shows you the established malls and their investment levels. The Chaya Center at $36 million, which is the largest. Then the Civil Mall and the CTC around 18 million each. And the Labin Mall and the City Center around 14 million each. So these represent significant capital that's been deployed, and the market is now working out the most productive use for these assets, I would say, is repositioning them, as I mentioned. So with that, let me come to the outlook of each sector. So residential apartments, we are looking at this in a positive angle. The urbanization tailwinds, the Rashtra Bank's mortgage easing, and the constrained new supply due to permit bottlenecks, and the genuine housing demand is supporting all of these. And this is probably the most straightforward investment segment in Nepal real estate right now. And grade A offices, we are calling this as an opportunity. So there is a clear market gap for international standard facilities, and the tenant base from fintech, IT companies, and the development sector is also growing. So the rent rates from 75 cents to $1.15 per square foot per month, these are very competitive as well. So the right product could demand premium absorption as well. In the hospitality sector, we are saying we have to be selective. The international brands validate the market, but the key is to focus on differentiated products, aligned with Nepal's unique positioning, we would say. So experiential and boutique segments are better placed than additional generic supply, and the 1.5 to 2 million, the tourist targets provide the demand upside as well. And actually, the market is now emerging or shifting towards the mixed-use development. So the repurposing of existing mall and commercial assets into blended spaces, combining commercial, residential, and community uses is where the next wave of value creation will come from. So that is the overlook for Nepal's real estate. So I think with that, we have covered the summary of what our full report delivers, and with that I think we can come to any of the questions that you have. Thank you.
Excellent. Thank you, Hoshin. Very insightful. And I think the residential real estate sector to me was of special interest because you flagged its investability, the fact that an apartment in downtown Kathmandu can be in the affordable range of $75,000 and that this is still lot cheaper than buying a house. in the same tier category of semi-luxury. So that's encouraging. Then you mentioned that the per square foot rates can reach up as high as $300, which resonates with some of the prime markets in your neighborhood. Even in Sri Lanka, the tier one luxury apartments start from around $300. So I think $200 per square foot. So you're looking at quite a competitive market. I was curious to know that there were apartments selling at 150 million, or was that 15 million? I'm just wondering who would buy that.
Yeah, let me check that and come back to you, Mr. Roshan.
Oh,
We
yeah.
might have made a mistake on my end.
1.58 million, Hoshin. Yeah, it should. Yes, it's 1.58 million. It should be corrected. Yeah.
Yeah, my eyes started to water when I heard these numbers.
So,
So the other point was commercial real estate looks really attractive to invest and underpriced. If you're looking at the top of the market going for like 50 cents to $1.15, I think that's quite affordable. And the more exciting thing there was the tourism sector attracting some of the top brands. You mentioned Marriott, Hyatt, and Lemon Tree as well, which are very good signs. I would like to come back and discuss that a little bit more, as well as address some of the questions. But let me start with a couple of questions for Lochan from myself. We can see that the lion's share of the investment tends to go to hospitality, right? And this has been affected by the political turbulence that Nepal had to endure. And then the IMF and the World Bank are downgrading the growth forecast for this year. Of course, they don't always get it right. In the case of Sri Lanka, there's a debate between the Central Bank of Sri Lanka and the IMF on what each of those institutions believes the actual growth rate will be this year. So only time will tell who is right. In your view, what is the impact of political stability? What is the situation there? Are we now in a stable situation? And how do you think this impacts real estate investment as a whole? Over to you, Lochan.
Thank you, Roshan. It was a great presentations done by the Nirikshani and Hoshin. Talking about the current situation here in Nepal, say after the political revolutions, I would say, or the protest, Gen Z protest, because that is a famous word throughout the world at the moment. So after that, we are going to have the election on actually after 7 days. Okay, so it will give a fresh mandate, and then people are expecting a lot of change will happen after the new government formed. Recently, here is not much growth. It is a stable kind of the economy at the moment, but especially in the different segment, like you said, the real estate, the hospitality in this segment. So the growth has been impacted by the policy level decisions, I would say. So once the new government formed, so if they will look after those constraint, especially in the policy side, carefully and make the necessary changes, definitely the real estate sectors looks good for the investment purpose in the return wise also, and then it will contribute in a better way to the GDP of the country.
Thank you, Lochan. For the benefit of our listeners, could you explain who is in charge at the moment in Nepal? Is it a caretaker government, and how are they doing?
The in charge of this caretaker government is a former Chief Justice Sushila Karki. So her major mandate, or her government's mandate, is to just successfully conduct the election. So she is more focused on this one. So nothing much has done by this government, and nothing such policy changes has been made. One policy change was made to facilitate the foreign investors to take out their investment, but unfortunately that was also overturned by the Supreme Court, saying that there is no parliament at the moment, so it should be passed through the parliament. So there is no such impactful decisions the government has made so far. So their current mandate is strictly to go to the elections and then held it successfully. So they are into that track. So after 7 days, once the elections will be concluded and then the new government will formed, definitely there will be many changes we will see, which could definitely benefit all the investors, not only the foreigners, but for the Nepali investors also. They are waiting that time.
Brilliant. And you mentioned that this election is in 7 days, right?
Yeah. Yes.
Fantastic. So we are wishing and hoping for a peaceful election. Nirikshani, I'm going to turn to you as well. What is your take on the impact between investment sentiments and political stability at the moment in Nepal? I mean, you spent some time there as part of the research team. So what feeling did you get? Is there a positive anticipation for the election?
I would agree with Mr. Loshan's answer. Nepal has had a significant political volatility due to the Gen Z movement. They were having a political government changes and also periodic unrest. So the September 2025, that revolution or as that movement, it hit the services and the tourism meaningfully. And the World Bank's 2026 growth downgrade is directly attributed to that as well. But what I would like to say is Nepal's political risk is a noise risk. It's not structural or a collapse risk, according to my perspective, because this country has never defaulted on debt and never had a military coup and its democratic institutions. However, the 2015 constitution created a federal framework that's actually dispersing. I think I have already mentioned this. They are decentralizing the political power away from the Kathmandu Valley. So, which over time should reduce the all or nothing stakes for the central parties. For investors, specifically, if you are going to invest, if you are going to look forward for this, the practical implication is to build political risk into your timeline assumptions. That's good, because the projects can be taken longer and the approvals can get delayed during the instability periods. I think it's not only for the Nepal, even for any country who is going to go through these kind of things, it's usual. I think we as Sri Lankans have had to face this. But not to treat it as a binary deal breaker. Don't stop because by thinking of these things. The IMF and World Bank, they have given a good news for you people, like the low debt distress classification, and they are continually giving the concessional financing, which low interest rates, and they are giving a loan concessional period. So you can say that the international community is also backing up the Nepal's economy, and you have to be prepared. That's what I say, because this thing, like the risk is always there, but you have to be prepared. I think with that you will be able to manage it well.
Excellent. Thank you, Mirabad. And Hoshin, do you agree with this sentiment? Now, post-election, we believe it will be peaceful and lead to stability. What are we looking at for the next 12 to 24 months in the short term? Can we see a different uptick in the actual investments and the investment sentiments for real estate?
Yeah, first of all, yes, of course, I agree with what's being said by Lochan and also Nirvada as well. So at this stage, I would say the market is better described as to be a bit cautious and a cautious recovery rather than in for an expansion cycle. Yeah. So while there has been some improvement sentiment and activity, if you look at the actual transaction, the data shows something different. And even talking about the real estate, the property deed registrations that has only increased from by around 0.15%. Which is essentially a flat outcome. Yeah. So that tells investors that the market is stabilized from a weaker period, but it has not really shifted into a strong volume driven upswing. So the opportunity is there, but it is selective and location sensitive and also segment dependent. rather than a case where almost any asset can ride a market-wide boom. Yeah, that is it for the next 2 to 24 months, I would say.
Yeah, that's of course very pertinent, especially in the industry we're in. So building without considering the outcome or sans doing a proper feasibility can lead to all kinds of problems, whether it's a wrong product segment, wrong location, targeting the wrong segment. So this is where we obviously chip in and help developers and investors to optimize what they do. Lochan's gone off for a cup of tea, so let's push on. I was quite amazed at the contribution of remittances. 25% contribution to GDP, right? And this is probably at the top end of any country in the region or the world. How, on the one hand, of course, this is a asset. We have seen that real estate markets in emerging economies behave very differently than in advanced economies, and remittances are a demand driver, right? So in this regard, turning back to you, Nirvada, how do you feel? What do you think remittances are a signal of overdependence on money coming in from migrant workers, or is it a strength?
That's a tough question, but I would say it's an important question because I think, as we have mentioned during the presentation, Nepal's remittances are 25% of GDP, which is quite high compared to the other regional peers as well as in global. So remittance dependency, it's a double-edged sword, I should say, because, a significant share of real estate demand, particularly mid-market residential and the land purchases outside of Kathmandu, is mainly remittance funded. And when we were doing our research there, we have seen that the middle class is also growing. That's also rooted by the remittances. And if Gulf Cooperation Council economies get slow, oil revenues will start to fall, labor market policies can be shifted. And I'm pretty sure Nepal will start to feel it quickly because the majority of their, migrant workers are working there. So the near-term outlook is actually reasonably stable. That is, like Gulf demand for the construction and services labor remains robust. And Nepal has been diversifying destination countries, not only for the Gulf region, but towards Japan, South Korea, and parts of the Europe, similar to Sri Lankan context. And that offer higher wages and more stability. So the remittance base is both growing and diversifying. When we were talking with the people in the industries, they were also telling that most of the younger generation tend to migrate as the working population for the other countries. But the medium answer has to be domestic income growth. As we have mentioned the hydropower export revenues, I think in the beginning you also have mentioned this. It's a growing formal service sector and rising tourism earnings. As I have mentioned, there is the untapped potential growth in terms of tourism. And the structural substitution should be built. And as I have mentioned, for the policy researchers, not only the investors are here with us. This is exactly where the analysis gets interesting. Why? Because Nepal needs to convert remittance capital, which flows into the property and consumption mainly, into the productive investment. I think most of the South Asian regions are entrapped there because their remittances are going towards the property and consumption, not towards the productive investment. So that is a long-term risk. And that's a policy design challenge. There is around the financial intimidation as well as the incentives for the investment in productive sectors, and they can strengthen out the capital markets by designing good policies. As I think you have asked specifically about the real estate sector, but I have
That's fine.
Yeah, even a partial softening in remittances would soften the land price appreciation in the secondary cities more than the Kathmandu. center is the Kathmandu value, but if there is even a small softening in the remittances, that would soften the land prices as well. Because the urban employment and the institutional demand provides the flow for the land prices. So, yeah.
Yes. Yeah, I think that's a policy challenge as well you touched on, but the other one, of course, is not in anyone's control, or is the geopolitical risks that can arise from overdependence on remittances that primarily originate from the Gulf region, which, of course, has proven that it can be volatile. Another area of volatility, of course, is the banking sector and its interaction with real estate. So I want to turn back to Lochan for this one. What is the banking and finance environment in Nepal at the moment? I've seen that private sector credit has dipped a bit, but that may not be such an alarming short-term indicator given the current situation. But what about credit conditions, project finance, end-user finance? Does the industry in real estate specifically and the private sector as a whole get the kind of support that is required from the banking and finance sector?
Yeah, thank you for the question. So still, the banking and financial institutions are supporting to the businesses here and the businessmen, even for these consumers. But the problem we have seen is, especially after the Nepal was included on the grey list in 2025. So after that, scrutiny of the documents are quite stringent. So due to that, the loan flow to especially the real estate sector is strict. Even though I had a quick chat with one of my friends who is in the bank. So with the positive hope, after the elections, the new government will formed, and then they will take the measure. They will implement the major policy changes to tackle with this grey list problem, and once it will be lifted, the economy will be good. So as per his information, so the loan flow to the real estate sectors has been grown in last 2-3 months. Okay, that is not in the significant amount increment, the significant percentage increment, but still as compared to the past months, so it is better. So it is a positive sign for all of us. So what I want to focus here, or I want to mention it here, is within the norms, within the regulations given by the central bank, all the banking and financial institutions are supporting to the businessmen, even the individuals who are trying to take the loan from the banks.
This is an encouraging sign. I think many other countries post-COVID, the NPL ratios did skyrocket before eventually coming down. I've got more questions now from our audience. A quick one for Hoshin. Is the commercial real estate sector investable at the moment, Hoshin? Would you say? You didn't.
I think it is a selective play because, as I mentioned, there is a oversupply of generic commercial space. But if you are looking for grade A or like internationally reputed or standard facilities, then obviously there is a demand, but have to be cautious about that as well, and have to go with a thorough research. But we can see potential in this grade A office building supplies, but not in the generic commercial space. A quick answer to your quick question. Yeah.
Thank you. Okay, we have a question from Mr. Anil Nupane, based in Kathmandu. He wants to know, who are the potential customer segments for a mixed-use development project, 100 million plus projected? And secondly, is there identified potential investors, domestic and international, for such a mixed use? So who would like to take that one?
Yeah, I would say if we are looking for customer segments who would be interested in these mixed use, I would say the upper middle to high income urban households, and also the returning diaspora people who are seeking, secure amenity and rich apartments. And of course, the young professionals, entrepreneurs, and the designees and delegates who are working for NGOs and international NGOs. So they would probably be interested in these mixed development properties. Yeah.
Okay. And the project finance, where would it come from typically for this? Would it be leveraged from financial institutions, or do you have deep-pocketed developers who can continue to build, or do you need to pre-sell it?
So actually, from our research, what we have found is the investors would be mostly domestic investors rather than like international players coming in and investing at the moment. So it would be mostly the domestic financing, I would say.
Okay, thank you. So,
See,
Mr.
Roshan, I want to take this one here. So,
Please,
yeah, especially the customers is like the Hoshin said, so they are the potential one. Beside that, in the mix, the properties, the banking, and even the boutique hotels, and then even the small tech companies which are growing here. Beside the traditional businesses, so these are also the new businesses which are looking for the better space. So that can be the potential customers. And the investor side is throughout the world. What we believe is the insurance companies are also one of the big investors. And considering Nepal, or looking after the recent trend of the Nepal, so venture capitals and the equity funds are also growing here. So they are also one of the major investors in this segment. FDI, especially the foreign investors, are not allowed to invest in the real estate sectors. So that is discouraged by the Department of the Industry here, or let's say the government. But these growing industry players are also one of the bigger investors or the potential investors in these sectors.
Thank you, Lochan. And that is interesting to note because that's a sign of confidence in the industry. I've got a question on mall investment and its relationship with tourism, something that we have seen in the region, actually, where domestic footfalls are limited. Tourism offers mall developers a bigger market. Are you seeing any of that on the ground yet, or do you anticipate? And who would like to take this one? I mean, I can answer it to some extent that we do find in our data a strong relationship between tourist arrivals and mall development. And obviously, a very good example is during COVID, when there were no tourists coming to places like Colombo in Sri Lanka and Maldives. The malls had to literally give their spaces at zero cost, zero lease cost, in order to keep occupancy high, because with a 10-15% of footfall generated by domestic retail customers, they were not able to sustain themselves. So there was a period of adjustment. Now I see that in Nepal, tourism is growing at a fairly healthy rate. And I would argue that Nepalese tourism is more stable because you're having tourists from within the region, your immediate neighbors, and things like an oil price shock or geopolitical risks may have a lower impact on your tourist arrivals than many other markets. So what is the mall footprint at the moment in Nepal? Hoshin, I think you can say, do you think that we will get more mall investment as tourism in numbers increase?
So right now, I would say the mall investing on retail malls specifically is not a strategic decision per se, because even the existing malls are largely mostly vacant. Yeah. So I think going forward, even the existing malls might need repurposing as I explained earlier as well. So even the tourist demand picks up, repurposing of these existing malls would matter a lot, like integrating, let's say, other educational hubs, or maybe renting out for some of the offices. So developing more and more malls just because the tourist arrivals are keeping up, I think for Nepal, it would be a different story. Looking at the absorption, I'm just commenting, yeah.
Okay, thank you. Yeah, I think perhaps as the repositioning of malls takes place and we factor in the impact of e-tailing and the idea that malls are shifting more towards F&B, it may be a case of adjustment. So, person anonymous, I hope that answers your question. Staying on that, there's a question. I'm gonna aim this at Lochan. Which real estate segment do you think has investment potential in the short to medium term?
Yeah, this is an interesting question. So, what we have seen so far is the hospitality sector is one of the potential investment sector at the moment, because there are a few reasons behind that. So one, honestly, though the tourist inflow, number of the tourists has not been increased dramatically, I would say, compared to the room availables here, because of the main reason is our newly built international airports haven't increased the number of flights due to some constraint imposed by the Indian government. Okay, so that is a one. Beside that, even without the number of much tourists here, the hotels sectors can issue the public offering, initial public offering, that IPOs to the public. Okay, so by doing that, they can recover their certain investment, and once it goes to the stock market, so the price appreciates of the hotels despite the business is not that strong enough. But you never know what will happen after like 2 years, 3 years, or the 5 years. If by that time the number of tourists increased and the room occupancy increased, definitely the revenue side will be also increased. On the other hand, the stock price will also appreciate. So considering this, hotel sectors, and once you invest and once it goes to the IPO in the current situations, one can sell that stocks after 3 years. Okay. So once it goes to the IPO after 3 years, one can sell it into the market in the market price. So that is much interesting at the moment. Even and the foreigners are also allowed to invest in the hotels. Okay, not only the Nepali. So directly in the real estate investment is prohibited for the foreigners, but in the hotel sectors they can invest and they can return their investment also. So that return seems lucrative. Okay. One,
Is there a capital gains tax for foreign investors when they take money out? Is there anything that the government taxes when you repatriate funds?
See, that is the questions of the debate. So I told you recently. So double taxation system is here. So 25% is the capital gain tax for all. So once they get it, so that has to be paid. And for some of the investors, there is a double taxation system. So that is still in the debate. So once that will be levied, I think the government is working on that side. So once the new government will be formed, so they will work on some policies. And after that, it will be easy for them. Okay, the government will ease this process, and then it will be easier for the foreigners to take back their investment or the dividends. Okay, so capital gain side is also there, and the revenue growth or the revenue side is also there. So from the operations perspective also and the investment growth perspective also, both ways are the beneficials for the investors. And in this segment, the foreign investors can also invest. Okay, so I see this sector will grow, or the potential sector for the investment for few years. definitely. And beside that, like Hoshin also said about this is the we are mostly depend on the remittance, and we all know the trend of the peoples who go abroad, like in Sri Lanka or Bangladesh. There, they want to at least buy a small house wherever it is. So individual housing, these houses will be also the potential sectors for the investment. Okay, even for the developer also, they can make a mid-range of the houses, let's say, like if it is possible, not only inside the Kathmandu Valley, only major cities of the Nepal, they can invest. And then they, if the cost will be in the range between like 70-80,000 USD to 200,000 USD, up to that, people are eagerly buying, means they will be waiting to buy that one, because once the new government will formed, many things will be changed. Even the foreigner workers who are in other countries, they are also closely watching the elections here in Nepal, because they believe the new government will definitely do the many good things for the Nepal, and they can come to Nepal and stay here. So that sort of viewpoint is also there. So for me at the moment, these two sectors are the potential for the investment.
Fantastic. I think you've hit two questions in one. There was an anonymous question aimed specifically at Lochan to ask about real estate as against stock markets as well. We are almost out of time. But I have one more quick one on property rights for all of you, or who'd like to take it. Are property rights fairly secure in Nepal? I think Nirwate could probably just give us an overview.
Yes.
Very quick.
Yes, I'll be quickly go through this. I think Mr. Loshan also has mentioned about this. Foreigners cannot directly buy land in Nepal. So that's the biggest restriction for the real estate investors. But there are some workarounds that we can do. Foreign investors can partner with a Nepali company as a joint venture, or else they can set up a foreign-owned company in approved sectors like tourism and hospitality. In these cases, they can usually, lease the lands instead of owning it. So tourism and hotels are the easiest way in. Many international hotel brands like we have mentioned Grand Hyatt, Hilton, they're operating in Nepal through the lease deals and the management contracts. So that's why a large share of foreign investment goes into tourism.
Absolutely.
So, yeah, and the policies are quietly improving, but not smoothly. So the government wants to make the land access easier for the big projects, and Nepal is good for investors who are patient, who are willing to partner locally, and who will be thinking about the long term. It's not suitable for the quick profit or fast exit real estate investors. So as I think Hoshin also has mentioned, it's a frontier market. There are obstacles, but potentially higher returns if you manage it well. So you have to think a lot before you step in.
And presumably, the Marriott, Hyatt, and Lemon Tree are doing well on their balance sheets in Nepal. So thank you, Nirwade. And I want to close with a quick 30-second, 1 minute summary from each of you on what you expect in the post-election period, starting with you, Lochan. Very quickly. Your forecast? Yeah, I know you've touched on it already, but is there anything else you'd like to add?
So far, see, again, we all know the politics is a major driver of the country. So if the leaders drive the country in the right way with the good policies and all, it will definitely benefit to all of us. All the stakeholder of the country, I would say the investors and the consumers, whoever they are. So here, there is a very big hope with the new government, honestly, because in last, especially post-COVID, nothing much has happened over here, nothing much development activities and all. So I believe, like they will expedite the development process and all, and then they will actually hit the gear to the right directions for everyone's, and I am very hopeful, like we will get a good result of it in couple of
And you are, of course, I think, one of the youngest democracies in the region, if not the youngest, right?
Yeah.
So, yeah, I'm sure you're going to do great. So, with that, I want to thank Lochan Koirala, Hoshin, and Nirvada for a wonderful session. Thank you to the listeners and the questions you've sent. It's been very interactive. Thank you for making it very stimulating for all of us. If anyone's interested in the report, you can get your hands on it. Get in touch with us. There's a coupon discount. Get in touch if you have any more questions for me or our panelists, our experts here. I'm sure they can address any concerns or questions that you might have. If anyone here needs a participation certificate, get in touch with the team and they will arrange that for you. Thank you once again for our main sponsor, Fitsair, who currently travel to Maldives, Dhaka, KL, Dubai, and Colombo, and will be launching 3 more new destinations. We can't wait. And they now have business class as well. So that's good news. Big thank you. And my name is Roshan Madawela. I'm the founder of the Research Intelligence Unit. We'd like to thank all of you for listening, and God bless everyone. Thank you.